Hello and welcome. Whatever a company's vision for the future, and especially so in the banking sector, it must include digital in order to grow and thrive. As transformative technologies are entering the workplace at exponential speed, bringing the change businesses need not just to survive but to thrive, we're increasingly seeing that collaboration between enterprises, modern ways of engaging with the customer base, more innovation within the workforce itself, and the ability to draw valuable insights from captured data are just several of the key benefits that are helping businesses grow, all with the aid of technology. And in this particular space, nowhere is it more pronounced than in the banking sector. And to talk to me about developments on technology and innovation in the banking sector, please put your hands together to welcome in no specific order, Sumit Gupta, Chief Risk Officer at Yes Bank. Sumit, welcome, sir, and deeply delighted.
Thank you, Arjun. Thank you very much for having me on the show.
Thank you, sir. And Deepak Raju, Head of IT at RBL. Deepak, welcome. Equally delighted, sir.
Thank you, Arjun. Look forward.
Absolutely. Gentlemen, the next 30 minutes promises to be very fascinating, and I'm directly going to jump into it. And with your permission, Sumit, if I could come to you. Circa March 2020. And today we are almost pretty much there on the date, March 2022. If there have been learnings over the last 2 years, what has been your perspective on how the banking sector has transformed over the last 2 years, and what does it hold for us in the future ahead?
So I will not refer my discussions regarding Yes Bank. Let me talk about the industry per se.
Indeed.
Yeah. So March 2020 was in any case a time when the next 2 years were actually COVID infested. Hence, the responsive partly has also been realization of reality as to what is there for us to look at and how do you manage that. So till, let's say, 1920 as a year, if I were to use that word, April 19, March 20, that's about 12-month period. The whole digitization, digital, all of that stuff was intertwined. You ask anybody, everybody will touch it like a different body parts of an elephant, saying it out, that this is a trunk and this is a stem and this is a tree.
Indeed.
And everybody was trying to figure out, is this a good evil or a bad evil to live with? Is there something which is a necessity, or is there something that we can live without? And is there something that we should join hands to kill them? Or is it something that we should join hands to actually live with each other and the likes of it? The industry as a whole was indeed rapidly moving towards digitization piece ever since for the preceding 5 years itself. Right, the degree of digitization kept on galloping every year, and post DeMo everything ever since the UPI thing got launched. As so, the payment industry has been in a perpetual transformation space.
So true.
Now, all of these things, changed, I think 2014, 15 or thereabouts, ever since the APIs got introduced in the banking sector. That was the eureka moment, if I can use that word, or, maybe proactively or prematurely speaking, WhatsApp moment for the banking sector as a whole, because that was the one event which really transformed the way banking sector were consuming data and throwing data. And since then, in the last 2 years, which are COVID years, when customers were not really very keen to meet, customer acquisition was a criticality, necessity. So you couldn't have lived without acquiring customers, because that's what you live on as sales teams, as businesses, as revenues, because you still had to reward your shareholders, you still had to make a bottom line, you have to still make payment of salaries and expenses and so on and so forth. Hence, in the last 2 years, if at all anybody had any doubts, all of that got honestly shooed away. The amount of partnerships banks created, and I think you have just two right banks, RBL and Yes Bank on the panel right now. The amount of integration, the amount of adoption that banks did with fintechs as part of leveraging each other's strengths is something that we can take a few collaborative lessons in B-schools as well. So the ability to, or not ability, I guess the appreciation of strengths, complementary strength that fintech brings to the table was something which has been realized extremely well in the preceding 2 years. The partnership which have been created so that we can cooperate with each other and create winning unit partnerships to acquire customers, service customers. The concept of open banking. In the last 2 years, the regulator and government have also introduced something called an account aggregator. which is another absolutely constructive disruptor to push for a financial inclusion, create availability of finances to the MSME domains, which are all, I mean, nobody could have imagined till a few years back, that something like this can happen. So while extending funding to individuals is being enabled by the availability of bureaus, that's comparatively easier to populate the bureaus and easier to dissect. The ability to dissect and obtain and then dissect GST data, income tax data, some of those things have been a challenge, which as the government is also realizing that if they have to push for financial inclusion or access to finance, they need to be able to provide enablement to the lenders for some of the data-driven aspects.
In fact, sir, with your permission, I just loved what you just said, because I'd just like to get Deepak into this conversation. Deepak,
Sure.
Sumit just brilliantly articulated the whole concept of, how financial inclusion has been driven. I have a complementary question to this, which is that as financial inclusion with the enablement of technology continues to happen, how do you leverage technology to radically transform the experience for a new generation of consumers today? Whose demands and needs are perhaps entirely different from what we've been prepared for?
No, great question. I'm Gen X, right? Gen X people will remember that, opening a bank account, needed a recommendation letter from a landlord or an employer or a neighbor, address it specifically to a branch manager. And then it takes about 15 days to open an account, and all that you had was a passbook, for somebody to make a manual entry of withdrawals and deposits. But today, with the use of technology, there is an absolute transformation, right? Application data capture is online. People are using, OCR, AI bots to, sort of weed out data. Sumit talked about, API, which is enabled online verification of, Aadhaar, PAN number, KYC data. Identity verification has become online. eKYC, VKYC, CKYC, you name it, everything is online, and you have liveliness index to sort of just detect whether it's a live customer or just some kind of photograph that someone's using to fake an account. Customer due diligence has become online. Decisioning and underwriting has become online. Consent layer has become online. I never imagined that I will live in an era where banks will adapt something like DocuSign or ZoSign or Legal Desk, which enables customers to just sign in any device using any mechanism, and you don't need any in-person verification at all, right? So that's the power of digital, and we've seen it. I mean, Sumit talked about how 2020 was almost like a watershed moment, and we were living in a very gloomy state of affairs. The economy was going down the drains. But boy, what an opportunity we've had in 1 year. We've just completely changed the industry. And if there's two industries that have made most of it, one is healthcare, and the other one undoubtedly is financial services.
No, I couldn't agree more, because I think what is also equally important, and to bring that conversation back, we've, I think, fairly established, Sumit, and I come to you, established the fact that technology has been perhaps the pandemic's natural catalyst, that it was perhaps technology. By that measure, Sumit, you spoke about inclusion. How increasingly are we looking at technology to be able to bring the unbanked, the real unbanked in the rural areas into the banking fold? How do you bring that awareness to them? How do you tell them the merits of the overall banking system and the save and risk portfolio and the ecosystem? How do you do that increasingly? Because there's millions of them out there.
So correct, Arjun. So a few points. So the government started, Jan Dhan program in 2014 thereabouts. It was a strong push given. Now, the initial reaction of all banks was that one more social obligation. That was honestly the truth. I mean, somebody could have said that. Some people may not have said that, but that's exactly how it was. Life began to change, over the few years, as and when gradually the direct benefit transfers started flowing into their accounts. And today, I'm sure you have tracked last week's development when UPI is being developed and pushed through for feature phones as well,
True.
which is what was released by RBI last week, right? Now that honestly could be the moment that you're talking about. Now, with the Jan Dhan accounts and increasingly being put to use for a variety of reasons, including payment of, let's say, subsidies, government subsidies, and more important, disbursement of loans by MFIs or micro loans by banks into the bank account. So let me give a perspective. Till 4 years back, let's say 2017 or thereabouts, the disbursement and collection of loans from MFIs, so micro loans, whether it's MFIs or banks, was always dealt in hard cash. That has undergone a 180-degree shift over the last few years. Disbursement today is nearly 100% directly into the accounts. Now, the usage of that amount, to a large extent, reality is that they still withdraw cash from their accounts. That is step one. Step two is when this whole feature phone fever is going to grip the economy in another, let's say, 6 months or thereabouts, whatever time it takes. That is when the shopkeeper there or the man here, today you have a GPay, you have a Paytm, you have WhatsApp Pay, all that kind of stuff. But that's to a large extent urban. It could be a tier 2 or tier 3 phenomena, not yet in deeper geographies, because the proliferation of smartphones in that domain geography is relatively limited. Now, with the feature phone coming into this domain, this could be an altogether different game.
Absolutely.
The convenience, the safety of carrying cash, all of those things is going to transform. And let me tell you, if people believe that the rural folks are less savvy or less amenable to change, I think that's not true at all. I think
That's not true at all.
everything is driven by need, convenience, and what they believe is safety factor. So in
No,
my view,
brilliantly put, because that's exactly. Please
Carry
go
on,
ahead, sir.
carry on.
Please go ahead. Because you made a very interesting point, which is what I'm going to bring to you, Deepak. Isn't it slightly awkward that the bank is the principal institution that acquires the banking customer and then goes through the processes of helping me set up my account, save my money, receive my money, and so on and so forth. But at the end of the day, it's the GPays and the Paytms which are so often used that really know what the customer is doing. Now, do you see a gap in being able to understand customer preferences, customer processes, customer trends of purchase, and so many more other activities, as well as a Paytm or a WhatsApp or a GPay would essentially do?
Well, it is very pertinent, and it sort of almost segues into what banks should become. We are talking about embedded finance, embedded journeys, banking as a service. Some people call it banking as a service. I think it's very important that banks recognize that the banking journey will, increasingly be embedded into non-banking journeys, and they will only be just moments of payment. Like you walk into a restaurant, you make a reservation, you order food, and then you have the payments moment, and that's when you're only going to think about a bank. Otherwise, bank is just going to be invisible. In my mind, despite the plethora of definitions that are there, the one that I personally like is embedding finance into the customer journey, so that the actual finance is behind the scene and it is becoming invisible. And that's what's going to happen. That's what's happening to insurance. That's what's happening to banking, payments, wealth management, you name it. We can see these things happening. And a fulcrum of these innovations are the big tech companies, right? That's what you see. And Amazon also the world. Why does Amazon foray into payments? Because for them, the payment experience is very hardly coupled to their checkout experience.
True.
Right? So that's why they invested into making the payment experience as frictionless as possible. So there's no chance of any failure rates happening. They built their own wallet. So everything is within that ecosystem. Google Pay has done exactly the same thing. Of late, we don't know what's happening there behind the scenes with RBI. I don't know whose toast they stamped. Increasingly large number of failures that we're starting to see. Paytm has got The user journey absolutely spot on, very, very highly reliable. Banks are also going down that path, but we are very, very aware of what the big techs are doing in terms of owning the customer journeys, and we're also constantly evolving.
No, that couldn't be true. And I do have a view on the clock, of course, gentlemen. But Sumit, I must come to you with a statement that is often said, but perhaps I will request you to please correct me if I'm wrong. It's often said that with this whole concept of business model transformation within the banking sector, and I speak overall about the banking sector, it's often said that today a lot of bank processes are anchored to how banks have always done business, in the sense of the word that they often serve the needs of the bank more than the customers. In that sense of the term, sir, how do you see technology being able to truly help modernize business processes to keeping the customer at the center of everything that one does? And I do understand the regulation and the compliance piece of it, of course.
So Arjun, it's important to get, one different aspect on the table and appreciate that. And then I'll come and address your question.
Indeed, sir.
The bank is a regulated entity, which means there has to be a capital, there has to be a bottom line, there has to be a return on capital generated and return on asset generated and the likes of it. You have a competition, which is a domain called fintech. If you ask somebody to define what a fintech is, nobody will be able to give you a definition of fintech, right? But it's a tech company which dabbles into, generally speaking, in a finance domain, who are not regulated entities, who are driven absolutely fancily by creating disruptions in the financial set processing space, which is all very welcome, who are absolutely fine to make humongous losses for years at end, who are not governed by anything to do with regulations, and whose valuations are driven by the innovation irrespective of the bottom line. Now,
Indeed.
You answered a point, you asked a question a few minutes back that the banks, sorry, you mentioned something. Yeah, so no, there was something else that you asked Deepak actually. So let me explore that. The banks are happy to create disruption within the regulatory framework in which they have to operate. So one of the reasons why it's best to partner with the fintechs is indeed to do what you just asked for, service the customer, give the customers the UI UX, the frictionless, which is the new buzzword around, honestly. And to my mind, I'm not sure from a risk standpoint, absolutely frictionless journey, I'm not sure it's very good to have in banking also, by the way.
Interesting.
That's my view, and we can come around to that as also. This purely from a risk standpoint, as a user, I would also want to have, absolutely frictionless. I press one enter and I'm done with the transaction. But does this put me to a greater risk in the overall not so polite environment? Maybe yes. So I need to make sure that I keep my controls in place and yet offer absolutely frictionless journey. One needs to debate as to how far it can go and no further. So coming back to your point, I think the bank is absolutely one of the reasons the banks are falling over each other to try and partner with the fintechs and the non-fintechs. You have people who have partnered, you have banks who partner with the food or distributors or for credit card issuances, for collections, for AgTechs, and a whole lot of them, right? All of that is to make sure that the services being delivered by the bank are far more, let's say, specific, far more user-friendly, and far more non-intrusive in the customer's, let's say, journey or the customer's lifestyle. So that is indeed the idea. Is not to try and do everything, recreate, reinvent everything by ourselves and try and do that ourselves. There's no point in doing that. Somebody has actually burned $1 billion down the line and actually created a valuation for him. Good for him. As long as I can leverage that R&D and use the end product to my advantage, I'm fine.
No, I couldn't agree more with you, Sumit, because that's what I'm going to bring to you. With so much innovation today, Deepak, happening, and obviously even within the bank, there's so much of data that you have available about one Arjun Viswanathan. Why do we still perhaps not see the levels of innovation in personalized products and personalized services as one would really like to? Where do you think the challenge is, and where do you clearly see the opportunities there? Because
I think maybe, where banks are not leveraging data, as much as they would like to. It's happening in pockets and in a lot more in retail, very less in corporate, absolutely zilch in treasury, which is still run-of-the-mill products. And don't get me wrong, many people don't understand, the exotic products on the treasury side. That's why you see increasingly companies like Goldman Sachs, openly declaring themselves as technology companies. They're not banks, right? JP Morgan has come out and said that, JP Morgan is a technology company. They're not a bank. I mean, quite a statement to make for, these banks that have existed for, donkey's years, just in the business of market making and disintermediation, not just the traditional banking services that we see, but they are a little more on the tending to fall on the little more exotic flavor, if you will. But I want to, just touch on what Sumit mentioned. It is indeed true that, the fintechs of the world definitely have a tilted scale in terms of ability to innovate and take innovation to market. Banks will, of course, take time. We can't take our chances. Of course, we do our own pockets of fail fast and skunk works, etc. But it's not going to. We're not going to just throw something out open to the customer to adapt just like that. We will take a relatively slower approach because we are a regulated entity. The only thing that fintechs don't have is they don't have a license.
indeed.
And they don't enjoy the trust of the customer, right?
No,
Banks enjoy a lot of trust from customers. So
That's very
therefore,
powerful.
we will take our own time and not just rush into things, right? But the departure that I want to make from what Sumit mentioned is the world is quickly moving on to what the traditional banks would miss out are things like decentralized finance, right? And this was about $4 million and just doing experimentation. Now it's about $100 million. Reaching about $100 billion. Very quickly in about 11 months or so, right? So this whole decentralized finance, which is making the financial system much more open, permissionless, removing the trust out of the financial intermediation. This is going to be big. I personally, bet big on, smart contracts, Web3, crypto, blockchain as the bulwark of what finance or the financial world will become. Maybe 5-7 years from now, conservatively speaking, but much faster. As you can see, in the Ukraine war, when the ruble fell and people did not have physical cash, they all fell back into their smart contracts and their wallets, right? And they started exchanging cash using just peer-to-peer mechanisms. So that's something that banks will have to be very wary of. The regulator is making all the right noises. India will come up with CBDC in 12 months. There's a race against time. There are committees that are formed.
Actually,
and people who are very, very well informed of what's going on in the blockchain. You'll be very surprised that the government will indeed take lead to become the best innovator in the country.
very true, because I must take this. And Sumit, I know you've got to leave, which is why I will ask you the parting question before I come back to Deepak, which is that if all of this that we've established is and were indeed to be true, the future of banking in India, is it going to continue being as staid and as cautious, or are you seeing increasing levels of innovation fueled by data truly happening where you're sitting today?
So I'll answer that in a few perspectives, Arjun. One, please understand, banks are the business of trust. So whatever innovation the banks do, we cannot put the funds of the depositors at a high risk. That is one baseline that we need to recognize. We are not looking at only prop trading or prop book. We are talking about millions of dollars of customers being deposited with us. Hence, there has to be a very, very differentiated and high degree of responsibility with which we conduct our businesses and innovate and bring products to the table for consumption of services. That's very important for us to know. Unlike some of the other players in the industry right now, fintechs, who are only playing on equity. This is one significant difference in the two. Second, the way data, you've been talking about data and personalized services. Please understand, we are steadily moving toward mass customization being offered to individual. When you open your apps and you open your bank apps, you will have something called offers on different shapes and forms.
Indeed.
It could be personal loans, it could be credit card, it could be specific to the whatever you guys are doing on auto loan or the likes of it. All of that is running on data. Now, some part of this thing will undergo a change as and when PDP becomes a reality. To what extent will the banks be able to use data of our own customers, forget the prospects, internally to try and create a customized offers? A lot will depend on what rights would the customers give to the banks on an ongoing basis. Now, so it will take some time for the equilibrium to reach, for the customers to also mature, to understand what is it that I can allow my. So if the customer chooses not to use the data and then says कि नहीं मुझे customization नहीं मिल रही है, you can't have it both ways, right? I mean, you will have to allow the banks to mine your data, to mine your UPI data, to mine your credit card transaction flow, to mine your accounts, to figure out what is it that you could need at what time of the day. They can't be dreaming. So, it works both ways, which is what I'm trying to say. And the PDP, once it comes in, it will necessitate banks to undergo a series of changes in the banking architecture, in the way we process data, the way we store data, whole lot of that. And that could be an absolutely new, let's say, a version or new environment in which banks will also get used to it.
No, very true. Deepak, your view on this in conclusion, the future of banking in India?
Oh, I think, just picking on what Sumit mentioned, PDP is going to be key. It was presented by the Joint Parliamentary Committee. It was supposed to be presented in the bill was supposed to be passed last month, but not yet. It remains to be seen how that will play out. But for banks, it's going to be key, because we're putting the power of permission back into the hands of the customer. But I see banking going to be very, very exciting. If at all two banks, that can lead the way is going to be players like Yes Bank or RBL Bank, because for us it's easier to change than some of the most systemically important banks in India. It's going to be extremely exciting.
Wonderful, Deepak, Sumit. It has truly been fascinating. I stand so much the better having heard you articulate your views. That's pretty much what we have time in the segment for, because I know you've got hard schedules ahead. Deeply delighted and very, very grateful. Thank you so much.
Thank you, Arjun. Thank you for the great proposition and opportunity. It was absolutely likewise.
Thanks, Deepak.
Thank you.
Thank you.
Arjun Vishwanathan in conversation with Sumit and Deepak. Stay tuned. We'll be back with the next segment in just a moment.